Let's talk about the Dow Jones. The price action is looking really interesting. The price is nearing its December high, and on a break to the 30,111 level, we could potentially see the index try to target 31,000 before the end of the year. What's also normal is that we tend to have bullish stock markets in December and January, and that makes the price action in today's non-farm payrolls really interesting. So let's take a look at the Dow Jones, as I'll share the levels I'm watching to hopefully trade this later today, alternatively early Monday morning. Alright, so this is the Dow Jones. So we're trapped in what looks like a ascending triangle. Now, it's a bit different, well not different, but we need to be a bit creative here, right? Normally you would include this high as part of the pattern, but I'm ignoring that one, and that means that I'm focusing on the November 9th high, the November 16th high, the December 1st high, and the December 3rd high, which is yesterday highs. Now, we had a bit of a correction down yesterday, and the reason for this is because Pfizer told us they're not going to be able to produce as many vaccines they thought they were going to be able to produce before the end of the year. Apparently that's been rectified, but we did have a little bit of a slide here. Now, the big challenge today is the non-farm payrolls. It's definitely unpredictable, and you tend to have unpredictable price volatility on that news. So one would need to be really careful here how you manage your positions. But this just to give you a bit of idea of what I'm considering. So when you have a pattern like this, you would measure the difference, and that would give you that take profit level. So on a say daily close above 30,111, we could potentially see much higher prices. And I would be looking to maybe get a break to that level and then maybe put a stop loss. It's probably ignoring the level where the price spiked to, but maybe working on something like this. This will be like 29,924. And that will give us a really solid risk reward ratio of 4.49. The general idea and the best of things would be there is no breakout before the actual non-farm payrolls. You just need to be careful because sometimes price is going to spike just the minute before, the minute after, but without really people adjust. Well, actually, the minute before would be actually, we could sometimes have a spike. And that's something we need to bear in mind, right? So ideally, we get the data out, and the data is good, and then people push the price up and we have a breakout, and then we just need to see. But as I just mentioned, you need to be really careful because we tend to have high market volatility. If one is worried about that, then one option is effectively just to wait until Monday or maybe Sunday, and when the futures markets open, and then try to get involved. The challenge with that though is that the risk reward ratio is probably not going to be as good as it is right now. Okay guys, this concludes today's market update. Don't forget to subscribe to our videos, and don't forget to press on that little bell button. That way you receive a notification the next time I do a market update. See you guys soon, and have a great weekend. Bye.